Good evening, everyone, and welcome to our BullCharts User Group webinar for remote users. And given that we haven't had a Melbourne meeting for a couple of months and maybe not for a couple more, we could have some Melbourne people in the session tonight. Let me mention that Alek has been a long-time user of BullCharts and of our BullCharts User Group based in the outer suburbs of Sydney. And Alek knows a few things about Heikin Ashi. He may not profess to be an expert, but he knows enough to be able to share some knowledge with us tonight. So, Alek, it looks like you're all ready to go. It's over to you, and we'll all have a round of applause for Alek. Alek, thank you very kindly, and we'll hold questions till the end or put them in the chat box.
Yep, thank you. I trust everyone can see that screen.
Yes, we can. Thank you.
Okay, good. Look, Heikin Ashi candles, it's a subject that I became interested in absolutely purely by chance. Back in 2016, I joined the board of the International Federation of Technical Analysts and happened to meet a guy who was a director at the time, a gentleman by the name of Dan Valque. Dan, as it happens, is a gentleman who studied and brought to the Western world the Heikin Ashi candles. He's since then written two very good books on the subject, one in 2011 and one in 2016. Obviously, as I got to know him, he encouraged me to have a look at Heikin Ashi. And I must admit, since then, I've made a bit of a study of it and have tried to follow some of the extensions to the straight Heikin Ashi candle, which Dan suggested at the time. So, okay, what in effect is the origin of the Heikin Ashi candle? It originally originated in Japan, but as I said, is relatively new to Western traders. It was first released, I suppose, in an article in Stocks and Commodities back in 2004. It's really a variation on the Japanese candlestick, and the name Heikin Ashi, Heikin means average, Ashi means bar, hence the name means average bar. It's fundamentally a price filtering technique where the open, high, low and close values are calculated differently to give you a different size and shape of candle. The whole idea of Heikin Ashi is to be a better visual representation, a better visual tool to enable people to be able to recognize trends more readily. And the purpose of the Heikin Ashi candle is to draw your attention to trends and trend reversals, and certainly does help in providing better decision making. If we look at the difference between candlesticks and Heikin Ashi, candlesticks, as you know, are extremely popular with traders, but they do involve at least 100 or so patterns. You have many very flexible rules, and some of those rules vary depending on the context in which they appear. Individual translation of some of the candle arrangements and patterns is quite subjective, and as you're aware, there's lots of cheat sheets, books, etc., discussing various reversal and continuation patterns. Personally, I love candlesticks, but I do find that understanding all the various combinations has, over a period of time, been quite beyond me. With the Heikin Ashi candles, it's a far simpler process. It's far more objective, and it's also quantifiable. and context is not a factor. In the whole process of understanding Heikin Ashi, there's only 3 patterns involved and there's only 5 rules that apply. So it's a very short learning curve. You can also think of using Heikin Ashi not as a competition with candlesticks, but actually in combination with them, in synergy with them. Features of the Heikin Ashi candle. As I've already mentioned, it provides striking clarity of trends, and reversals are very clear. Trends and changes in trends are shown by the change in the colour of the candles. You have doji-like candles with upper and lower shadows, and these tend to point to probable trend reversals. And if you get a series of these with both upper and lower shadows, and maybe some people refer to shadows as wicks, they tend to define a period of consolidation. There are no gaps in Heikin Ashi charts as there are in candlesticks charts. And in fact, where a gap appears in a normal candlestick chart, on a Heikin Ashi chart, this will show as a long candle. So overall, turning points are sharper, you see them more readily, and therefore the analysis of trend improves. So as I said, there are only 3 types of Heikin Ashi candles. There's an up candle, a down candle, and the doji candles. You'll see throughout the presentation that different colours and arrangements are used for the candles. Originally, when the Heikin Ashi candle was brought to the Western world, this was the way that Dan Valkew showed it, and this was the way the candles were plotted. As you can see, the up candles are shown as hollow candles and the down candles as shaded candles. Over a period of time, other people that have got involved with presenting Heikin Ashi candles have often filled the candles in both directions, and this has become quite popular. In fact, in bull charts, this is the way the current coding of the Heikin Ashi candle appears, with shaded in both directions. But that's really not necessarily the way it should be, and I'll come back to how this presentation is shown in bull charts a little later. So looking at what happens in this sort of situation here, just very quickly, you see a series of red candles. You can see the wicks heading downwards, and you can see a very clear trend of a downward situation. Again, on the other side here, you've got the green candles going up, again showing good solid wicks above. Here you've got the doji type candles, and particularly where you've got the wicks or shadows at either end, it does indicate a period of indecision. Again here. So that's really the main things you'll see in any Heikin Ashi chart. You'll see the upward trend, the downward trend, and periods of either indecision, or sometimes when these are longer, it can also signify a period of consolidation. Here, this is taken from bull charts, as you would recognise, and you can see the situation here. Standard candlesticks, lots of red and green intermixed, and to the eye, not always very clear. You look at the Heikin Ashi candle and you can see much longer periods of a single colour indicating very clearly the trend and the way the price is moving. Here again, just looking very quickly here, I mentioned gaps in the charts. You'll see here's a gap in the normal candlestick chart. Down below, what you see in the Heikin Ashi chart is a long candle instead. What is Heikin Ashi? Heikin Ashi is a chart that filters out price noise. Again, it shows trends, consolidations and reversals are very clearly visible on the chart. It also works in all markets, so it can be used and is used quite often in Forex markets and is functional across all time frames. But it's not the be-all and end-all. It can be used standalone, and certainly people like Dan Valque do promote it as a standalone system. And interestingly enough, he publishes a weekly newsletter which covers more the American market, and he does highlight particular opportunities there that are presented all using Heikin Ashi charts, and some of the quantification that I'll talk about later on. In trading, we tend to look, as we're making our decisions, at three elements: sentiment, trend, and momentum. And Heikin Ashi charts are very well suited, or the candles are very well suited to this. Sentiment is gauged by the colour plus the size of the candle body and the position of the shadows. So in just looking at a candle, you can very clearly understand what's happening. The trend is shown by candle colour, and the momentum of that trend is measured by the height of the candle body. On the charts, you'll only see these types of Heikin Ashi candles. You'll have the green candles with no lower shadows, which indicate an uptrend. Red with no upper shadows, which very clearly covers the downtrend. Doji-like with shadows, where they indicate that the potential reversal of trend, and a possible period of consolidation where you get a number of doji-like candles in a sequence. One of the good things about, again, looking at Heikin Ashi candles, apart from the colour, you can also see very clearly the direction of the trend if you look at the direction of the wick, where the wick is only at one end of the candle. So with the green candles with only upper shadows, you can see very clearly the direction that the trend is going. So I mentioned earlier that there's only 5 rules that are involved in understanding how Heikin Ashi candles work. Very simply, rule 1 covers a sequence of either up or down trends where you've got the candles with only wicks at one end. The second rule is that the trend, either the uptrend or the downtrend, gets stronger as the body length increases, and if there is no lower or upper shadow, depending on whether it's an uptrend or a downtrend. When the bodies of the candles get smaller, and under rule 3, you get not only the smaller body, but you get the emergence of both upper and lower shadows. A series of the smaller bodies with upper and lower shadows is covered by Rule 4, which indicates a consolidation, and Rule 5 is when you see the emergence of a small body with a long upper and lower shadows or a sudden change of colour. So let's look at those on a chart. So here we have the various rules. Rule 5, which is a likely reversal, because you can see here a number of candles with upper and lower shadows. We then move into a period of an uptrend, and very clearly you can see the, particularly here, you can see we've got longer bodies occurring, the shadows only at the top. Here the bodies start to reduce again in size, and you're starting to get the doji candles, which is telling you that a reversal is likely. We then come down into a period of a downtrend, and again you're getting increasing length bodies in the downward direction, the shadows only at the lower end. And you can see how this works throughout this whole pattern. And again, you've got a period here of, I suppose you'd call it, could be a period of consolidation. It's over about a month and a half, but these are indecisive type candles over a short period. Considerable indecision here with long shadows, but with very small bodies. Again, the same thing. If the session was more interactive, we could go through and talk about what you think about each of these periods. You can see quite a long period of, say, consolidation here in this particular one. And I've just drawn attention again here to the gap which occurred in the candlestick chart, and it comes out as a very long-bodied candle in the Heikin Ashi chart. Construction of Heikin Ashi candles. These are the formulas that apply. So the Heikin Ashi open is actually calculated totally from the previous bar. So you take the previous day's bar and you take the open and close and you divide it in two, so that each starting point of the next Heikin Ashi candle is at the midpoint of the previous candle. So if we just go back here for a second, you can see here, this candle starts at the middle of that one. This candle starts at the middle of that one. This is a particular way that the Heikin Ashi candle is calculated. The close of today's bar is just the average price, which is taken the open, high, lows, and low and close and divided by 4. So it's the average bar of the average price of the current bar. Today's Heikin Ashi high is the maximum value looking at today's high, the Heikin Ashi open or the Heikin Ashi close for the current bar. So it's the highest value of those three. And similarly, the Heikin Ashi low is the lowest value of the current bar, being either the low, the Heikin Ashi open or the Heikin Ashi close of the current bar. The formulas are fairly straightforward and quite simple to calculate. And if you actually have a look in the coding of the Heikin Ashi indicator in BullCharts, you'll see those formulas clearly listed. But now we can actually do a little bit more with Heikin Ashi candles, and you can actually do some quantification of those candles to actually try and improve the accuracy of how you select your entries and exits. This is based around the bodies of the Heikin Ashi candles. These are the main features used to indicate and assess trend and direction, as you'll remember from what I said earlier. So in developing this quantification process, Dan Valkew has developed a new indicator which he's called HA delta. It's actually just the difference between the Heikin Ashi close and the Heikin Ashi open. So you could appreciate that where you've got long candles, there's obviously a big difference between the Heikin Ashi close and the open, and long candles will apply at extreme positions, and I'll show you this all on a chart in a moment. Shorter bodies tend to bring the Heikin Ashi delta closer to zero. Positive values, of course, are associated with green candles and negative values with red candles. So what's it look like on a chart? On a chart, so here we have the Heikin Ashi chart developed from this candlestick chart, and here you can see HA delta, which is purely a measure of the body of each candle. So you can see with this very long candle, this is the calculation of the difference between the open and the close, and because it's in a upward direction, this is on the upward side of zero. As we move along, you can see these candles bodies are becoming less, and hence HA delta tends to go down. At this point in time, you're actually crossing from a green body to a red body. So the value of HA delta goes negative. And you can see as these bodies get greater, the value in the negative direction also becomes greater. Now, the idea of developing this was to try and give some way in which you can better predict where these changes of trend are going to occur. And so initially, the idea was to use this HA delta. You can see that as this is heading down, the likelihood of a change is going to occur when you get to zero. But not this in itself is the Heikin Ashi delta is a very raw and sensitive indicator. It does give you some indication that when the chart does get to extreme values in either the positive or negative direction, and if you look at the history of the HA delta for a particular stock, you can see that when it starts to get to extreme values, it does tend to turn around and come back. So it does give you some indication of when trends are starting to change and move. However, using it by itself tends to generate too many whipsaws, particularly where trends are not strong or during periods of consolidation. So moving a bit further on, and as you can see here, over a much longer period of time, you've got quite a mixture here of this chart, which would make it very difficult to use. So what Dan has proposed is applying some smoothing, just applying a simple moving average to HA delta, which he now calls the 3-bar simple moving average of HA delta. He now calls HA delta plus. And so when you in fact get crossings between the indicator and its moving average, you get better indications of when alterations in trend will occur. Even that in itself does produce quite a number of false positives. So in fact, what he's done is actually to improve the process further. He's applied a second simple moving average smoothing to the first simple moving average. And this tends to give much better results. So let's look at that on a chart. So here we now have the same chart as we looked at before. Here in the blue line, you've got the original HA delta, and in the red line, you've got the 3-bar simple moving average of HA delta. Again, as I said, the crossings between the two still tend to give too many whipsaws and false positives. However, if we move on and now take HA delta out of it altogether and just look at the 3-bar simple moving average and then the 3-bar of the 3-bar, you now get much better results. So, for example, you now look at, and on the next slide, we'll talk about very quickly the rules that apply. But you can see here that when the red crosses the green is a good indication that there is an upward movement in trend. Likewise, however, we don't use the on the exit side. You might think, okay, well, we should exit when the red crosses below the green. No, in fact, the point to get out is when the red crosses the 0 line. So if I just move on to the next slide, you buy when the first simple moving average crosses above the second moving average. And the results work better if that cross occurs above 0. But actually, as we just saw on that previous chart, it works reasonably well, even if the cross is just below 0. And you sell or short when the the HA delta plus, which is the first simple moving average, crosses below 0. So let's just go back to that chart for a second. And you can see, for example, if you use this as your entry, you would have entered here. You would have followed it through. Because the red actually didn't cross below 0, you would have remained in that trade until this point here. So you would have actually gone from there to there, or on here, which is from there to up there on your price. Likewise here, you could have gone in at this point, but even better here, where the red crosses above the green again, and you can see you get a very nice result here, and you don't actually get out till there, virtually just past the peak on the price chart. So it's quite a good strategy. It's something that Heikin Ashi provides, but it's not available in just this sort of quantification. Doesn't apply with normal candlesticks charts. Moving on, a couple of things that I've been interested in is how some of this works in even longer term investment situations. And I've found a couple of references where people are talking about smoothing Heikin Ashi charts. But unfortunately, the detail has been less than helpful. But I have done a little bit of work, and you can see what I'm talking about here is you've got your standard candlestick. This is your standard Heikin Ashi, and this is a smoothed Heikin Ashi. I'm still not happy with some of the work I've done here because the wicks don't follow the standard Heikin Ashi pattern, but you can see you tend to get much longer runs in these situations than you even do with the standard Heikin Ashi. In fact, if we look at those three charts there, in the candlestick chart, over that period from May 2017 to October 2020, in the candlestick chart, you had 81 changes of colour in that period. The Heikin Ashi standard chart reduced that to 54, but the smooth chart reduced it to 16. It's something I'm still doing some experimenting with, and it is, I think, a very interesting way to go. The other thing you can do, and I won't dwell on this for too long, but you can also use with Heikin Ashi moving averages. One of the strategies that Dan Valkew also suggested was to add a 7-bar moving average of the ordinary closing price, the normal closing price, to the Heikin Ashi chart. And so you buy when the close of the Heikin Ashi close crosses above the 7-bar average, and sell when the opposite occurs. So let's just look at that on the chart. So here you've got a situation. The blue line is your simple moving average of close on 7 bars. Here you can see the Heikin Ashi candle has closed above the line, so that's a buy signal. And here in this situation where the close of the red candle has been below the 7-bar simple moving average, it's a sell signal. This does tend to work reasonably well. It might be something you might care to try yourself. Heikin Ashi, as I mentioned earlier, works in all types of time frames. Ideally, the best situation to confirm your buy or entry is that when the 3 time frames all have the same the green candles in each of the time frames. So if you've got green candles in the day, the week, and the monthly chart, then that does really confirm that there is a very positive uptrend. Alternatively, if you get green candles in 2 consecutive time frames, in other words, the daily and weekly, or the weekly and monthly, depending on what your trading plan is, that's also tend to be a good confirmation that green candles in those situations will give you a positive entry signal. One of the things that is included in one of Dan's 2 books is how to add volume to Heikin Ashi candles, and this is by actually using equivolume or candle volume and applying the Heikin Ashi formulas to those. It's something that I haven't been able to actually do with BullCharts, but it's maybe something that people might care to experiment with. Certainly, I think it could give some very interesting results. So in summary, what do we get with the Heikin Ashi chart? A very visual indication of trends, reversals, consolidation. Very easy to scan by eye. The charts are simple to implement, and you don't have to have understood the various patterns that apply with normal candles. Heikin Ashi can be quantified, as we've seen. They do tend to work better in higher time frames. I find that I use Heikin Ashi candles a lot on a weekly time frame, and I find them very good at that. They are quite effective in day, but I do tend to use the weekly as more the sort of basis of the studies I do. One of the things that probably I didn't mention as we went through but there is a one bar delay with Heikin Ashi charts over normal candlestick charts. Well, I don't have a chart handy to show you that, but it is just something worth remembering. So a turning point on a candlestick chart occurs one bar before it appears on the Heikin Ashi chart. I just wanted to sound one word of caution as you're using bull charts. I have been using, and this is here is the standard Heikin Ashi indicator as is currently available in bull charts. One of the things you may notice is that there are some open candles here. These are not correct. There should not be open candles amid all these filled candles. In fact, it is an error in the way that these are currently coded in bull charts. I have in fact done a new coding which I've passed on to Brendan to have a look at, and as you can see, this is the way it should appear. In fact, each of these candles where there is an open candle in the current coding should actually be a candle of the opposite colour. So if we look at this one and come down here, you'll see it should really be a red candle, not a green candle. So if Brendan does adopt this coding, which I hope he will, this is the way you will see the Heikin Ashi candle in future in bull charts. And I think it will provide a much clearer and decisive situation than these here, where in fact you've got, for example, a series of green candles going up. Suddenly you see, oh, what are these two red ones doing? In fact, both of them should actually be green ones, as you've got shown here. So just a word of caution, if you're using the current Heikin Ashi indicator in bull charts, this is what you'll see. Hopefully at some point in time, Brendan will change it to this. Thank you, gentlemen and ladies. If there are any questions, I'd be delighted to deal with them.
Thank you, Alek. That was very good. I've heard about Heikin Ashi over the years, many years I've been involved in this game, never really known what they were or how to read them. You've managed to explain tonight what they are and how to use them, and shown us some trading signals. The HA delta you mentioned,
yes,
that's not available in bull charts, is it, at the moment?
No, it isn't, but it's very simple, and I'm quite happy. I've got a coding of that, which I've done. I'd be only too happy, Robert, if you wanted to put it up in the Google Drive. I'd be more than happy to pass that on to you to include, so people can get to that as well.
Yeah, that'd be good. I'd like to put that up there. Can we put a copy of your presentation slides up there too?
Yes, I'll provide the slides and the HA delta.
Very good. Yeah, if you can send me those, I'll put them up there within a day or two. That'd be excellent. Does anyone have any questions?
I'll just make another general comment. I'm not nearly as adversed in it as you are, Alek, but Bruce Wood a few months ago gave in the New South Wales Technical Charters Association, gave a very good presentation on it. And it sort of engendered a bit of interest for me, and I've been playing around with it. And like as you said, it really does show the direction of a trend, and that's what I like about it. So, but yeah, so that's the only comment I can make.
Yeah. Now, look, I've used it for quite some while, and I'm very comfortable with using it. And I won't say I don't use other things, I do, but I really do find this gives me particularly if I want to scan a number of charts fairly quickly, I'll zip through particularly the weekly of the Heikin Ashi candle, because that very quickly tells me, whether it's what's going. Actually, Phil sent me something during the week where he's actually coded a ribbon that also applies to the Heikin Ashi chart, and that's also, I think, a very very useful thing, because again, he's coded it even a little bit more detail, in that he's looked at the difference between when the candles have only wicks in one direction and a different colour where the wicks are at both ends, so maybe less decisive in that period. I think there's a lot of opportunities with this, and I do find that using the Heikin Ashi delta and its two simple moving averages, I find also is very useful in confirming exactly what's happening. So I do tend to have those all on the same template, and I look at that.
Very good, Alek.
Yeah, very happy to supply the ribbon that Alek was talking about, the coding for that. I was just, I just noticed when you get a run of up days, that if suddenly a sort of a little wick or shadow forms on the bottom, there's a little bit of hesitation creeping in, and I coded that into the ribbon. It's not the holy grail, of course, but it might be useful.
Yeah, I think Philip's coding was still based on the original Heikin Ashi candle, was it not, or the coding currently in BullCharts? Yes,
it was. I'm very much looking forward to looking at the smoothing techniques you've just introduced to us.
Yeah,
I'd like to backtest that too.
Yeah, I'm quite interested. I've been trying different ways of doing it. As I said, I'm not. I think it's got some potential, but I'm not really happy at the moment, because I'm not getting the wicks performing the way I'd like them to perform. So I think I need to put a bit more thought into how I can alter that and get results that are more in keeping with the traditional Heikin Ashi candle.
Just a quick question. Great presentation. What was the name of the gentleman that you mentioned that had the weekly newsletter?
Yeah, Dan Valcu, V-A-L-C-U.
No worries. Thank you.
If you're if you're looking for his website, it's EDUCOFIN. EDUCOFIN.com.
Thank you.
You'll also find on that website, if you're really interested, his 2 books which you can buy. As I said, he has got this weekly newsletter. It's not free, I'm sorry to say. He used to have a free one, but he seems to have gone commercial now. Anyway, the website could be worth having a look at as well. And I'm certainly, if anybody wants any further information on anything I've covered tonight, please don't hesitate to give me a call or send me an email.
Alek, very good. Thank you.
Yeah, thanks, Robert. That is the website.
educofin.com.
Yep.
So happy reading, everyone.
Can I just make a comment, Robert?
Yes, Paul.
Trend lines on Heikin Ashi.
Yes.
Confirmation of change in trend when you get a coloured change from green to red gives a lot more basis than just a change in colour. You can put your moving averages on, but a trend line as well is pretty potent when you see a red candle come up at the change of the trend line when you're putting it on a Heikin Ashi candle chart.
Okay. I'm just making a note here in my book. Trend lines.
Yeah, you can run the trend lines off them like an uptrend, and you'll see the main ones, it changes red right at the point of the trend line change as well.
So in an uptrend,
Yep.
And a downtrend. Okie dokie. Paul, thanks for that.
Yeah, it's just a candle. Basically, it's taking the whipsaw out of some of your candle charts, just like when Alex was using the smoothing. You can also use, and part of his talk was on the moving averages too. Whether you're trading or investing different length moving averages, you'll find that the moving averages and the trend lines conform to give you a confluence for a really good change. Yeah.
Okay.
Something.
Paul, do you use Heikin Ashi very much in the work you do?
I've used them for about 15 years.
Okay. Very good. Maybe we should start a Heikin Ashi sub-user group.
Yeah.
Maybe Paul could have done this presentation much better than I could.
Oh, it's interesting because Peter Elston sent me something on the weekend, and it was interesting that it was about Heikin Ashi, and part of the talk was what came up in what I sent him. So it was a good bit of reinforcement. Yeah.
Very good. Okay. And Alek, have you tried using trend lines on Heikin Ashi?
No, look, I haven't, in that I'm quite comfortable with the change in colour being indicative, plus also I do include the use of the Heikin Ashi delta, of course, and I think that sort of gives me enough confirmation of what I need. I haven't really felt the need. I can see certainly the trend lines would work as well, but I think once the colour is changed, I'm quite confident what's happening, and I do find the change in colour pretty reliable. I tend to, when I'm looking after a change, when there's been the first candle, in most cases, you tend to find the first candle has still got wicks either side, which means it's not completely confirmed. Usually you tend to find when there's a change in trend, the second candle tends to have the wick heading in the direction that the trend is going. I think where you were just to the right there, Robert, if you just blew that little bit up there or opened it up a bit, you can see where you've had the change from the right in the middle there, the big candle. The first one's still got wicks. The second one is just a long candle, the green one I'm talking about. You can see where it's gone from a change, still a little bit indecisive because it's got wicks either end, and then the next one is a positive move. I tend to use that second candle as the point at which to come in. And likewise, I don't necessarily move out on the first red candle that I see. I often find, particularly when I'm looking at a longer trend, it's the second red candle that I tend to use as the signal, because sometimes you get one red candle appears, might take you out of what was a very nice trend. Yeah, for example, what you've got there just on the left, before you move that, you see you had quite a long trend in green there with two single red candles appearing.
Yeah,
I wouldn't take any action on those two single red candles. I'd only action it if I got two red candles in a row. So I'd get out of that trend about where your pointer is now, because that's the first place you've had 2 red candles in a row.
And if anyone's looking at that dotted green line, which was supposed to be a trend line on the weekly chart, this is now a daily chart, and I've not adjusted the trend line. So maybe we ignore that where it's currently placed on the daily. All right, Alek, that's, yeah, interesting to hear.
Can I just throw in, Kevin here, throw in another observation?
Yep.
I have taken somebody else's indicator and put over our Heikin Ashi bars. That's the moving average crossover of 313. And I'm finding it's doing exactly as Alek said. With the second red bar, you'll get a cross on those moving averages. And that's obviously an exit.
Okay.
So that's it's another smoothing technique. Just looking at the ASX, it's kept us in that uptrend at the end there since the 19th of July.
That was a 313, did you say?
Yeah, 313 EMA.
Yep, okay. One of the other indicators I use is a 513 EMA.
Okie dokie. I think we're out of time, out of